Hi, Jonathan York from Bay Financial Partners, looking at investment markets. The Fed appears to be facing a real issue at present. You've got sort of persistent inflation, and you've still got a pretty robust economy. Now, the latest CPI data came in at 3.5 year on year. That's just slightly higher than anticipated at 3.4. Month on month was 0.3%. But that's now 3 to 4 months when inflation hasn't really been falling there, even on the core numbers. It's still persistently hovering around that sort of 3 to 3.5 level. And that is still well above the Fed's target range of 2%. And much of the increase was energy and shelter costs. Now that comes on the back of a pretty robust jobs data coming out. Market was looking for 200,000 jobs created, came in at 303. And also as well, only very small revisions to previous months. So we're now 8 months past the last rate hike from the Fed, and there's still been a lot of talk about potential sort of cuts. That sort of started in November last year when they were looking at potentially 4 or 5 cuts for 2024. That's now been whittled down to maybe 2, and potentially some are even talking about the possibility of only 1 cut or none at all for this year. Now, when you throw into the mix the election as well, potentially the Fed doesn't want to be doing anything from probably sort of September onwards, for fear of being, sort of accused of interfering with their political process. It's really sort of walking a pretty tight line out there. Got some pretty high costs in some of the commodities as well. You've got copper at near 14-year high. You've got cocoa, which is up close on 80% for the last sort of 6 months. Sort of stated energy and shelter costs are also increasing as well. So really, the Fed is facing a bit of a predicament at present. Now, on the back of that CPI data, you've seen a pretty big jump in rates. 10 years up to 4.55, and the 2-year is nudging 5% at 4.97. Now, as always, the Fed is sort of saying, it's still data dependent out there in terms of sort of rate moves, but on these sort of numbers, it's hard to see a rate cut in the next sort of 2 to 3 months. Now, as the year's creeping on as well, obviously just over 6 months now until we get the election. Ex-President Trump has suffered a further sort of setback in his, potential legal battles out there, where the criminal trial for the hush money payment looks like it's going to proceed. He tried to get that delayed, but that has been denied. And this could really be the big sort of trial, really, because, if there were criminal charges he was found guilty of, that would really have a major impact on his ability to be able to run. Because certainly polling seems to suggest that if he was found guilty of a criminal charge, he would lose quite a bit of support. Now, obviously, with all the political unrest, you've still got, oil is sort of nudging higher. WTI is above 86 bucks, and Brent has broken through $90. Now, that obviously has some pretty major inflationary implications out there for the global economy. And not really being helped by OPEC Plus, still insisting on those sort of production cuts out there, sort of limiting supply, trying to keep prices high. Now in the UK, we've got some local elections coming up, but on the back of that, sort of polls out there indicate that the Tories, the ruling government at present, if it was a general election on current sort of standings, they would only get about 155 seats. Now bear in mind they have 320 plus at present. That is a major sort of whitewash for the ruling Conservative Party. Now, unlike the US, the EU region is seeing some pretty big falls in inflation. Their current inflation reading is currently around sort of 2.4%, which is obviously pretty good out there, and potentially brings into line the talk of sort of potential rate cuts out there from the ECB. And if that was the case, I suppose it'd be quite ironic because, historically the ECB has been a big laggard in terms of what the Fed has done, whereas this time around it could be reversed. Now, the Australian economy, it's pushing on at an okay rate, but consumer confidence is it's still pretty weak out there. And again, with sort of falling inflation, and inflation appears to be under control, talk has now turned to when will the RBA look to cut their interest rates? Now, bearing in mind they didn't increase them anywhere near as much as the other central banks out there, smaller than other central banks, but the fact they actually start to cut interest rates could be pretty significant. Potentially looking at maybe July or August for the first cut from the RBA. Now that appears to be in stark contrast to the RBNZ here. Just had the latest meeting, and left rates unchanged, no surprise there. But still talking about persistent inflation out there and needing to keep rates higher for longer. Now, bearing in mind New Zealand's in a recession here and has been for the last year, it's really pretty tight out there for the economy, and the economy really is struggling, and certainly could do with a rate cut. Really, the danger is that rates are kept too high for too long, and that really does choke off any sort of growth that potentially green shoots coming through, and the economy really does slip into a pretty major recession. In which case it'll be much harder to claw its way back out. I mean, just on food inflation, that's fallen quite dramatically. Current reading on that is around sort of 3.2%. Now, the peak of that was around 10.6 back in December 2022. Certainly the higher interest rates really are having a pretty major impact on the economy, but also on the share market as well. Globally, shares were up around sort of 8.4%, 8.5% for the last year. New Zealand index was only up 1.2%. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we'll look forward to speaking to you soon.